Guys, Kendra James-Anderson here with another episode of the Level Up Podcast. And today's episode is all about 5 different metrics that you should focus on to grow your business. You guys know I love talking about metrics, and I'm going to break it down for all different types of businesses and industries. So before I dive into that, though, I do want to do a quick recap on our last episode was all about cash flow and getting smart on where the money actually resides. That was a fun episode to record. So hopefully you had a chance to listen to that one. If not, definitely go check that out to understand all things cash flow and how it is different from profit, because it gets confused all the time. So different, but so important. And also, as the first 6 months of 2022 is coming to an end, I'd like to just kind of recap on how things have gone here at the Finance Femme. So as you may or may not know, we did kick off this year with a rebrand. I'm so proud of this rebrand because it was a lot of work, but so worth it. I started this firm back in 2016, and I've had the same key elements as far as like logo and brand colors. We've had a few different versions of the website, but the key elements have been the same. And it was just time for a refresh. It was time for an elevated look. Our business has grown, our brand has grown, our service offerings and our team has grown and expanded. We've updated our testimonials with big wins that our clients have had. So for instance, a client that had like 6 figures of uncollected sales. We helped her build a proper accounts receivable process where she was able to, accounts receivable is essentially collections of sales that are due to you. And we helped her build out that proper process. Actually, we didn't help her. We built it. We built out the process for her, and was able to collect the cash that was due to her. We also had a client that finally generated over $1 million in sales in 1 year. She's been aiming for that for several years, and we helped her finally hit that goal that she had for herself because we helped her focus and identify her top services and expand on those top services, and focus on those top services instead of doing all the things. And in doing that, she was able to generate $1 million in sales by actually doing less. Oddly enough, that's how it works sometimes. So the biggest wins for our clients always comes with clarity. So it starts with clarity of not just their financials and their numbers, but just also where they want to be in their business. I always start a lot of our conversations that way. But having a better understanding of where your money is coming from and where it's going and what the future plans are for your money, that planning, that forecasting, those projections are crucial and so very important. Having that plan is so important versus just winging it. And that's really where our CFO services thrive, is in showing you that future plan for your money, where a lot of services will show you what you have done with your accounting and your financial reporting. That's great. That's necessary. That's absolutely required. But that's just kind of where things start. The plan, the future focus is what's really going to help you make a lot of decisions moving forward. So one of the things that I've learned this year so far is that not only do women want the clarity in their financials, but they also want the community of like-minded women. So with my firm, you don't just get me, you get my team as an extension of your team. So you get access to your bookkeeper, to an accounting manager, to an analyst, to an operations manager. And I've always known that that was a key difference that our firm has, that our clients appreciate. It's very different and very unique to our firm. There are not a lot of CFO or accounting agencies out there that will give you access to so many different people to support you in your business. So I know that our clients appreciate that. But even beyond that, I'm seeing how important it is for businesswomen to connect with businesswomen. Earlier this year, I mentioned very randomly in my stories that I wanted to take a trip and travel and relax and just like connect with other women. And I asked who would be interested in that. And immediately, several women DM'd me about wanting to go on this, what is now a retreat. And so fast forward, and now I'm hosting a retreat with like-minded women. And I'm so excited about the things and surprises that I have planned for these ladies. But yeah, that's what I've learned, that business women want to connect with other business women. And it's about more than just like having business conversations. But imagine that when you are having these business conversations, how confident you will feel if you understand your numbers and you understand the plan for your business. So if those conversations start coming up, you won't feel confused or like you don't know or like intimidated. You'll feel empowered and educated because you understand where your business stands from a financial standpoint and as far as a planning standpoint. So anyways, that's just something that I've learned. But today and in today's episode, we're talking metrics, which if you know me, you know it's one of my favorite topics. So business owners, first, let me start off with a question. Do you know what you should be tracking to help you understand how your business is doing? Do you recognize which key metrics you should be paying attention to improve your company's performance and to help your business scale? So today we're going to talk about 5 metrics that you should focus on to grow your business, and we're getting clear on which business metrics are going to help you measure your success to effectively tell you if you're doing a good job or if there are areas where you should be making improvements. So who is this episode for? If you are in the e-commerce industry, you're going to want to know, retail metrics and traffic and sales metrics. Those are important for your industry, whether you're e-commerce or brick and mortar, if you have a product-based business. If you're an online coach or an influencer or a public speaker, you're going to want to know about sales pipelines and prospecting leads and payment plans and conversion rates. This is just me kind of dumping it all to you now. We'll go into a lot more detail here in a second. And if you are a consultant or a service provider, you're going to want to understand your sales cycle and cash flow, contract lengths, and length of service. So again, we'll dive into each one of these here. Let's start with retail metrics for like e-commerce or brick and mortar, like product-based businesses first. So the first metric that I will talk about is AOV, or average order value. This tracks the average dollar amount spent each time that your customer places an order. So is your AOV $32? Is it $307? Is it $14? Like, what is your average order value? And that's obviously very important because if you track how that goes up and down, then you usually can see a trend in your sales as well, assuming your order count is about the same, which we'll get to as well. But it's very important to understand average order value. The next metric is the average number of orders per customer. So it helps you understand like your customer lifetime value. Are your customers ordering once? Are they like one and done? Are they ordering and reordering every 3 months, every 6 months? Are you seeing that kind of a trend? Understanding if your customers are a one-time buyer or a multiple time buyer that buys every 3, 4, 5, 6, 12 months is super important in understanding your customer lifetime value. And you can also obviously make improvements there once you first understand it. The third metric is customer visit metrics. So there are a bunch of different customer visit metrics. Essentially, it helps you understand your customer habits on your websites. This is for those of you that are in e-com. So it might help you understand your popular items on your site or the popular times of days or days of the week that people visit your site, where they tend to drop off of your site, which is really important to know. Or if they put things in your cart but don't check out, so like your abandoned cart rate. Quick story time on that. So we had a client that had a very high abandoned cart rate, higher than the industry average. So it's important who you work with understands industry averages and isn't just feeding you numbers with no guidance on if that's good, bad, indifferent. So yes, just quick aside there. But we had a client that had a higher than industry average abandoned cart rate. We looked into it more to find out like what's going on, and we found out that there was this unnecessary box that they had on their website that right before the final checkout screen, the customer had to check this box in order to get to that final checkout screen. It was an additional step and people were dropping off of the page there. So we literally just removed that checkbox. It was an unnecessary box. We removed it and the abandoned cart rate decreased and the sales conversions increased. So had we not understood abandoned cart rates and paid attention to that, it would have just been missed sales. It's missed opportunity. Also, average number of units per order. So this is the units per transaction in retail. It measures the average number of items that customers are purchasing in any given transaction. So is it 3 units each time they buy? Is it 10 units, 7 units? Obviously, this number is going to fluctuate based on your product, right? But if you increase your number of units, you'll likely increase your AOV, that average order value, which in turn might mean that you increase sales. But one thing to note here is if you increase the number of units that you're sending out, you're likely going to increase the shipping costs that you have to pay to get that to ship out. So are you offering free shipping? Do you offer a flat rate shipping? If so, you want to do the math to see if it makes sense based on the weight of your products, right? So if you have heavier products and you offer a flat rate $2 shipping and you're trying to encourage them to go from 2 units to 3 units, but that third unit is quite heavy, and now the money that you're bringing in, the $2 for shipping, is far short of the $14 for shipping that you have to actually pay, was it worth it to get that additional $12? So again, this is when working with the right professional will help you think through these things and understand the impacts to your business. So next up, we're going to talk about average price of sold items. So this helps with planning. So definitely listen back to prior episodes where I tell a story about how to focus on revenue and profit and how we helped a client like dive into their product pricing and how they were running discounts. Definitely take a listen to that. But in short, you can discount too much. You can discount away any profit that you're actually supposed to be getting. So be careful about your pricing and discounting. So with that, I'll also give a bonus metric. So percent of discounts given. So along the lines of what I just mentioned, you want to track the percent and the amount of discounts that you're giving away. It's going to help you better understand your profits and if they're healthy enough to actually support the promos that you're wanting to run. So for you product-based businesses, if you are earning more than $20,000 a month in sales, you really should hire a specialized accountant or a virtual CFO that understands the retail industry to support you. It is crucial that they understand retail. They have to understand inventory. They have to understand COGS, which is cost of goods sold. They have to understand all of the particulars that is important to a product-based business. Without that specific industry knowledge, they can't assist with things like pricing and discounting and inventory purchases and proper inventory balances. They're not going to be well-versed in that. So you really want to make sure that you have somebody who specializes and understands the retail industry. Okay, next up, we're going to talk about coaching metrics. So these are metrics for you coaches out there. So the first one that we'll start off with is number of prospects. So having a healthy pipeline of potential customers, and understand that this is not like your number of followers or the number of people on your email list. This is actual prospects. So like viable sales prospects. That's going to be your first metric that you're going to want to track. The second one is number of qualified leads. Having a pipeline of potential customers that are warm and ready to buy is super important, and knowing what that count is very important. So the difference between a prospect and a qualified lead, because I know this is coming, is that a qualified lead has essentially been vetted. So you know they're a good fit for your coaching program. You know that they're actually, in fact, interested in your coaching program. So that's a qualified lead versus just a prospect. So another metric is the percent of pay in full versus the percent of people who do payment plans, because of course that's going to be important for cash flow reasons. You'll know when you'll have the money actually available to you. And as a aside, as a big tip here, you want to have a solid AR or accounts receivable process in place. Listen to my earlier stories about that, but you want to have that in place if you're going to offer payment plans. And be careful on how long these payment plans are. Are they 3 months? Are they 12 months? Just be careful about that. Think about it. And then lastly, you're going to want to think about conversion rates. So first, determine which conversion rate is the most important for your business. If you have sales calls, then it might be sales call conversions. If you require your prospects to complete a form, then it could be the percent of forms completed versus the percent of forms abandoned. So determine, what part of your sales process that you really want to track, and then create and track the conversions for that. So my advice for you coaches out there is to beware of chasing vanity metrics. You really want to work with the right virtual CFO and accounting staff to help you effectively understand your coaching business. we can help you identify your proper metrics for your business in general, and then also based on the season that you're in. Because as an example, if you are a coach that does launches, you're likely going to have to navigate your business differently between your launch cycles than when you're launching. When you're launching, you might have high ad spend, you might have a lot of income coming in at that time, and then between launches, you might have to have better control on your spending. So we can help you understand that, and we can help you manage that. Okay, so next up, let's talk consultants and service providers. So for you guys, the first metric that we're going to talk about as well is number of prospects. Now, this can be a bit more tricky for consultants and service providers because you tend to have a limit on how many people you can work with or how many companies you can work with at one time. And in most industries, there are like ebbs and flows or seasonality. So, for example, people should focus on taxes all year long. You guys know I say that all the time. There is no such thing as tax season. I've said that, and since I've said it, I've heard it 1,000,001 times, but there is no such thing as tax season. But for you tax professionals out there, you're usually swamped the first quarter of the year, and then a lot of times kind of forgotten about for the other 3 quarters of the year. Which, as an aside, if that's you, if you're a tax professional, you should definitely plan for the seasonality, but you should also inquire with me about my coaching program for accounting and finance professionals called Scalable Firms, and I can help you solve that problem. So definitely shoot over a DM to the Finance Femme or email us at info@thefinancefemme.com and ask about the Scalable Firms coaching program. It's probably going to be booked out by the time this airs for 2022, but we will have it open for 2023. So anyways, back to you all consultants and service providers. Track your active prospects at all times. So be aware of the active number of prospects that you have at all times. Next up is your average contract price. So are you charging correctly? What are you pricing? What are you basing your pricing off of? Are you just like randomly picking an arbitrary number to charge? Those of you out there, you know who I'm talking to. So understanding your average contract price is super important. And then understanding the components of that so that you can understand how to properly price. Next up is average contract length, like the length of time. How long is it going to take you to provide this service? Are you providing services that are recurring, ongoing services? And if so, how long do you tend to retain clients? So if it's a monthly service that you provide, do you tend to have clients that stay with you for a year, for 16 months, for 24 months, for 37 months? If it's a one-time project that you offer that's like 3-month increments, do you actually complete your projects in 3 months? Does it take you 4 months? Does it take you 2 months, 6 months? So understanding your average contract length, because again, you tend to have a limited amount of time. Even if you have an agency model where you have multiple people who are working on your client accounts, you still are often limited by capacity. So understanding that is important. And then next up is your average turnover. So how often are you onboarding new clients or projects? And do you have the proper operational procedures in place? So here at the Finance Femme, we assist our clients with operational strategy and execution. So we help clients ensure that they have a smooth onboarding process with their clients if they're our CFO client. Because the more efficient you are at onboarding your new clients, the better your retention will be, and in turn, your revenue and profit. So if you have an onboarding process that takes you 3 months to onboard a client for a 6-month project, if you can cut that down to 1 month to 3 weeks, if you can just cut that down, you can bring on more clients, your turnover is shorter, your project length is shorter. Again, you can churn through more clients, you can bring in more income, more profit. So understanding your average turnover is super important. Next up, conversion rates. So as I mentioned with coaches, you first want to determine which conversion rate is most important for your business. So again, if you're having like sales call, it could be your sales call conversion. So determine that, like that specific conversion metric that you want to track as it relates to your conversion rates. Now, my advice for consultants is to focus on high value and top-notch client relationships. So having 10 clients that pay you $10,000 each, is likely easier to run and maintain than having 100 clients that pay you $1,000 each. So yes, your service and your support should be better if you're charging $10,000 a client versus $1,000 per client. But if you're only working with 10% of clients, right? If you have a 10% of the client count, you should be able to provide a more exceptional service. And if this is all confusing and all these numbers, it's a little overwhelming for you, contact us here at the Finance Femme and we will be glad to assist you. We would truly be glad to assist you. So I really appreciate you guys joining this discussion about metrics and understanding the metrics that you need to know to scale your business. And it's important to remember that when it comes to reviewing your metrics and scaling, that you have to have a strategy to grow your business. So without strategic planning, without understanding your business metrics, you're like a missile that's like full of power but has no guidance on your target. So you definitely want to get that guidance, have an understanding of your projections, of your future planning, so that you can actually have a target to aim for. And it can definitely be difficult to measure and to monitor all of these metrics, especially as a small business or as a startup. So you just don't have the time to do it. And honestly, you just shouldn't be doing it. You should be focusing on growing your business, sales, your team, your processes, your workflows. So I recommend that you start small, that you focus only on the ones that affect your bottom line and your cash flow. And again, if you're not sure of what that is, then just reach out to the Finance Femme and we'll definitely here to help. So that's it for today's episode. Subscribe to the podcast, leave a review. It's definitely very much appreciated. If you are watching this on YouTube, for sure, subscribe over to us on the YouTube channel. Give us a like, comment any questions that you have below. Definitely follow us over on Instagram as well at The Finance Femme and shoot me a DM if you have any questions. And if you're sharing this podcast, thank you so much. I definitely appreciate it. Shoot over a screenshot or upload it in your stories and be sure to tag us. If you tag us, we can reshare it. If you don't tag us, I can't reshare it. So be sure to tag me at The Finance Femme when you do that. And again, if you are earning $20,000 or more a month in your business, whether you're product-based, service-based, coach, consultant, whatever, then definitely visit our website at thefinancefemme.com and we can support you, whether that is with our virtual CFO service or with our executive accounting service. All right, until next time.